Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Simon Popple, who's the MD of Brookville Capital and a sound money expert in gold investing, having dedicated his career to the gold industry for the last 15 plus years. Simon's on the show to discuss the main misconceptions of investing in gold and why now is probably the most important time, more than ever, to understand why gold is important as an investment vehicle to maintain and build wealth. Simon's going to be attending Europe's largest mining event, which is resourcing tomorrow, which is formerly known as the Mines and Money London event, which is taking place in London on the 28th to 30th of November. A great platform for the entire mining value chain, fostering learning, lively debates and providing valuable networking opportunities. So I've got a link below in the show notes. So please register now and you receive a discount on a ticket if you purchase a ticket. If you put the code DIGDEEP10 in, which is all in the show notes accompanying this. So don't delay. Please go and book your tickets to resourcing tomorrow. So let's welcome Simon to the podcast. How you doing, Simon?
I'm very good. Great to be here.
Yeah, appreciate you yourself. And as I mentioned, you've been investing in gold for a while now, and this is obviously a main passion of yours. So I just wonder if you can just tell our audience a little bit about yourself, a little bit about your background and your career, and then we can go into talking more about gold.
Yeah, no, absolutely. Well, I mean, my background is a typical MBA, worked in the city in corporate finance, buying and selling companies. Then I had mates in the property world who were earning very good money, but probably working half the hours I was. So I went into property, enjoyed that. Became a director of one of the world's largest private property companies when I was in my 30s. But if I'm honest, I kind of got a bit concerned about inflation and retirement. And I was told never love anything that can't love you back. And I think property probably falls into that boat. So even though I did very well out of property, I didn't see it as something I could always make money from. And so I kind of left it to set up Brookville Capital. I probably left it a little bit early, but if I'm honest, I've done very well with my investments. I got spotted by Money Week and got asked to write a newsletter for them. Then was asked to write a newsletter for Agora Financial, which used to own Money Week. I didn't actually realize at the time that when Money Week was sold, they wanted to keep me on, and so I wrote Gold Speculator for them. And now I'm sort of quite horny, for want of a better term, about educating people about investing in gold, even though it's been around for thousands of years and it's used in our sort of everyday language, like they've been as good as gold, or looking forward to my golden years, or I'm worried about that gold digger. People just don't seem to know how to invest in it. And what I really want to do is sort of educate people about investing in gold, and hopefully they can do as well as I've done.
Before we talk about the three misconceptions about investing in gold, what is gold? What is gold, and why is it important in maintaining and building wealth?
Well, I think there's a variety of different aspects of it, but let me just pick on a few. The first is it's limited supply. Gold mines can only produce so much. You only get so much coming to the market each year, and you can't print it. So I think that's quite important in this day and age, to have something that you can't print and it's got limited supply. The next thing is that we live in a global world, And gold is probably the only asset I can think of which is globally recognized as valuable. You can take a piece of gold anywhere in the world, and it's recognized as valuable. You don't get the same thing from equities, bonds, property. If you've got a property, let's say in London, it's going to be worth a hell of a lot more than a property in somewhere else in the country, simply because it's in London, its location. And gold is sort of location agnostic. If you've got gold, a piece of gold is worth the same in London as it is in Paris. So I think it's a sort of universal currency, and I think in this day and age where I for one have got my house is in sterling, my pension's in sterling, my earnings are in sterling. I kind of like the idea of having a bit of diversification, so all my eggs aren't in one basket. If I'm honest, I don't know what currency is going to be a winner, but I've had a look at gold, and it's done very well. So against any currency, so I'm happy to have some.
Obviously, we're talking about gold. Would you class gold in a similar category as silver, because they are both money? And I just wonder if you can just tell us a little bit maybe about the differences between the two.
Yeah, I mean, in terms of the UK, you pay VAT on silver and you pay a much higher spread when you buy it. When I say spread, it means, let's say the spot price is $23, you'll probably pay $25 or something like that. Whereas if gold, if the spot price was 2,000, you probably pay 2,001. So you've got a much smaller spread. But I think they're both valuable. I mean, personally, I think you should probably have exposure to both. And what I like about silver is, heaven forbid we had some sort of Armageddon, but if we did, then going around with a coin that's, let's say, worth $25 today means you can probably buy some fuel and food and things like that. Whereas a gold coin that's, let's say, worth $1,000, I don't think that's going to be much use to you. You don't want to go to your local supermarket with a coin that's worth $1,000. That's one hell of a big shop, and you probably aren't allowed to spend $1,000. So I think they're both very useful, and I think obviously silver's got a lot more applications in terms of industrial uses, but it's not as rare as gold. So if people are looking to invest in gold and silver, I'd say have a bit of both.
We were speaking off air, and I suppose people do have, or some people do have, exposure to gold. Now that may be in the paper markets, but there's also the physical gold. And before we go on to the misconceptions, why would someone potentially consider a physical gold asset rather than a paper gold asset?
Well, I think a lot depends on why you want it in the first place. And if you want it to protect you if there was let's say, a major economic collapse of some sort, then if you've got physical gold, that's it's tangible. It's I'll go on to the misconceptions in a moment, but that's something that you can point at it and you own it. Whereas if you've got a paper gold, you can point to a piece of paper, but if the economic collapse has meant that that organization that the paper's attached to is no longer viable, then the question is, what's the value of that piece of paper? So I personally, I do get involved in paper gold, but that tends to be more through equities. But I like to have some physical gold because I just feel it's more real. And there's a lot more paper gold than physical gold. So for me, I like to have some physical, which I think is important.
So you're going to obviously be speaking at the Resourcing Tomorrow event about the 3 misconceptions about investing in gold. So I wondered if we can run through them and unpack each one separately.
Yeah, no, absolutely. Well, I mean, the first one is that people think that if you invest in physical gold, you're going to have gold lying around the house. and you're not. I've invested a lot in physical gold and silver, and I've never taken delivery. The people that I buy it with, they store it for me, they insure it for me, and for me, it's a very useful way of managing cash because I've got money in my bank account, but if I'm honest, I tend to spend it, and whereas if I've got money sitting in gold, I don't spend it, but if I need it, I've got access to it. And yes, I'm taking a risk with the gold price, but that's a risk I'm happy to take. And so for me, it's not just an asset, but it's a cash management system. It's got a lot of benefits.
And obviously there's obviously three. So that was the first one. And I suppose based on what you said, I'm someone that also collects gold and silver. Although I do take delivery, I also have a safe deposit box. So I have a few of those. So I don't actually, again, physically keep any gold or silver at home. I've taken delivery and then I've put it into another secure unit for safekeeping, which I can then access when I go to that physical location, which is stored. So again, that's another way or another form where you can have access to physical gold or silver and take delivery of it, but then secure it in a highly vaulted area, which again is what I do.
Yeah, no, I think that's great. I mean, whether you do that or whether you get them to store and insure it is, I think it's the thing I love about this is you've got choice. You do one thing, I do another, but it's there's a massive misconception that you'll have gold, sort of lying down the back of the sofa, and it just isn't true. And I think that's something that if you go shopping, you tend to go shopping and you buy your food and you take it home, and if it's clothes or whatever it is, you sort of go out there, you buy it and you take it home. And I think that's one of the sort of things that messes with people's heads a bit about gold is you buy it, but you don't have to take it home. And you're like, oh, hang on, but I've bought gold, why haven't I got it at home? And it's just a sort of different way of buying stuff, but it's perfectly valid.
And what's the second misconception?
I think the second misconception is you don't get any income from gold, and that is something that a lot of people, they straight away go, oh, I want income, don't get any income from gold. And I think there's 2 points there. First of all, you can invest in gold stocks, and I was looking at one the other day. Newmont's got a market value of I think $32 billion, which is quite a large company, and it's yielding about 3.9%, something like that. Now, if I'm honest, I don't know what you can get in a bank account at the moment. Let's say you can get 4.5. But what I like about a gold company is, first of all, you've got the potential for capital gain. You've got 3.9 versus 4.5. You've got exposure to gold, so I think that could help you protect your purchasing power, and you've got exposure to, in the case of a really large company like Newmont, lots of different mines, lots of different countries, lots of different commodities. Whereas if you have got your money with a bank, you just got exposure to that one bank, and so I don't think there's a right thing to do with 100% of your money, but I just like the idea of having a bit of a spread, so I don't have all my eggs in one basket. So I think the second, I was going to say the second thing is you don't have an income, and I think the other thing I'd say is if you look at the price of gold in different currencies, let's say US dollar, on average it's gone up sort of 9-10% per year. Obviously, some years it's gone down, but if you look at an average over 20 years, something like that, it's done about 10%. So even though there's no guarantees the price is going to go up, there's always a chance that you can buy it, price goes up, and you then sell 10% of it, 5% of it, whatever you want in income. So you can be a bit creative and get an income. So I think you need to be a little bit careful of just looking at something at face value and go, right, gold, no income, not interested. There are ways of getting an income from it.
And what's the third misconception?
The third misconception is it's risky. And excuse me, if you invest in a gold junior mining company, yes, it is risky. But if you invest in physical gold, as just alluded to, you're investing in a commodity, and obviously you can go silver as well, you perhaps some other commodities. But yes, you're taking some risk, but at least gold's got a track record over a long period of time of protecting your purchasing power and helping you against the fight in inflation and things like that. And so I quite like the idea of having something which can help me in those areas, and I wouldn't view it as risky. If I want risk, yes, I'll get some junior mining stocks, but you don't have to invest in the riskiest format. And I think a lot of people they look at gold and they hear about these junior mining stocks and they go, oh, that's too risky. And yeah, they probably are for a lot of people, but you don't have to invest in that part of the market. There's lots of other parts of the market you can look at.
Obviously, people within the industry may know about gold and understand what value it is. But why isn't gold, I suppose, spoken much about in the media? And I suppose, why don't we learn about precious metals, gold or silver, in our just general education when we're at school? Is there any thoughts around that?
Well, I think that fiat currencies, you want your fiat currency to do well, and generally, if you're talking up gold or silver, you're talking down a fiat currency, and so I think that's probably one reason. And I think that people, they want a mixture. I mean, I think this is again a massive misconception. I haven't put it down as one of my 3 misconceptions, but I would never suggest to anyone put all your money in gold and silver. There's nothing wrong with having good exposure to some fiat currencies as well. But what scares me slightly is I think you should have at least some exposure to gold and silver, and most people have got literally none. And I think that's quite scary. I'd also add, I think it's a bit scary if you've got 100% exposure to gold and silver and no exposure to fiat currencies. I think it's all about a balance, and I think that's one of the reasons why people tend to talk more about the fiat currency than gold and silver, because given the choice, I'm sure governments would rather have confidence behind their fiat currency than gold and silver.
Why gold? Obviously, you've dedicated a lot of your more recent career to the yellow metal. Why? Is there a reason why you've decided, say, 15 years ago, to just focus a lot on the gold sector?
Yeah, well, I think it's massively undervalued, if I'm honest. And I think it's like anything in life. You want to buy low, sell high. And so when I was looking at the market, I was sort of looking at assets I thought were cheap. And even though gold is close to all-time highs, I still view it as attractively priced. And I'm not sure if you've got the chart I sent you about debt and gold, but if you look at debt, it keeps going up, and I haven't really heard a convincing argument as to why it'll go down. And if you look at the gold price, as debt has gone up, the gold price has done pretty well as well. And so, if you want to try and join some dots up, it would appear that if debt keeps going up, there's a good chance the gold price will keep going up. So I see it as a slight, I suppose, insurance policy, for want of a better term, against the higher debt that we looks like we're going to have.
Someone that's never invested in gold before, and maybe some of our audience who are actually in the mining industry may have not necessarily invested in gold before. What advice would you give them?
Well, that's why I put my gold package together, because when I did my newsletter, I've written newsletters, my own as well as for Money Week and Agora. I used to have phone calls with people, and I was fairly appalled at their lack of knowledge about investing in gold, and for that matter, investing in anything. And so what I wanted to do is, I put together a book called The Beginner's Guide to Investing in Gold. And that's really the whole thing. It's cheap. It's only like £4.97. The whole idea is that people just get on that journey and it just at least put some money in gold. It doesn't have to be much. Some people perhaps put 50 quid in it, or some can put thousands. But I think you need to start on the journey. And even though obviously I hope there's no Armageddon or any kind of nasty economic collapse, I think if there is, I think the world and his wife will want to set up gold accounts, and I wouldn't want to be at the back of that queue. So I think there's a lot to be said for at least setting up an account and buying a small amount, and then if times change and the sort of anxiousness goes away, there's a good chance you'll be able to sell the gold or silver, whatever you buy, back to these people. So I would view it as a form of insurance as well. So I think that going back to your question, if they've never done it before, the first thing I'd say is, at least get started, at least do something. Don't just listen to this podcast and do nothing.
And obviously, I don't want any predictions, but how do you see gold performing over the sort of coming years?
Yeah, I mean, going back to what I just said, I think the debt's going to go up, and therefore, if you look at the history of the debt and the gold price has gone up as well. Now, I think it's a very dangerous area to make predictions, but I think all I would say is I think gold's better days are ahead of it rather than behind it. So I feel comfortable with the price where it is at the moment. And just to add to that, I mean, I think the price is around 1900, and the all-in sustainable costs of actually producing it are probably around 1300. So logic, this is logic. There's nothing more than that. But logically, if the price goes below 1300, I'd have thought a lot of mines will stop producing, because you don't want to produce at a loss. And if you've got less supply, then demand will go back up. So I think, if you're buying something at, let's say, 1800, 1900, and I think 1300 is a logical floor. I'm not saying it is a floor, but it's a logical floor. But there doesn't appear to be a ceiling. And I quite like that.
You've written a book, The Beginner's Guide to Investing in Gold. Why don't you just give us a snapshot of the book and also how people can obtain a copy of it?
Yeah, sure. Well, first of all, if you go to goldprogram.co.uk, so that's just goldprogram.co.uk, you get the book. I've got two bonuses with it. The first is my 6 pillars of investing, which is when I look at any investment, the 6 things I like to look at. And I'm a professional investor, I do it for a living. And the second thing, funnily enough, when I started writing it, I thought, this is fairly useful. But it's as I was writing, I realized it was phenomenally useful. And what that is I call it discover where the funds are investing. And, a lot of people don't have much time to kind of carry out research and things like that. So basically what they can do is they can look at this and it can show them where a lot of the funds are putting their money. And so if you don't have much time, what you can do is you can say, okay, well, if BlackRock or Sprott or Fidelity have got a stake in this company or that company, they've obviously done a lot of research about it. So it's good enough for me. And so you can build your own little portfolio, which kind of mimics what, some of the big boys are doing. And within that piece, there's also a lot of smaller funds. So if you want to take a bit more risk, you can see what they're doing as well. So I think it's quite a good cheat sheet, for want of a better term, as to some companies you can get involved in without doing a huge amount of work.
And how can people purchase the?
If they go to goldprogram.co.uk, and you can purchase it there. If you go through goldprogram.co.uk/free, you can also get a download of the 3 misconceptions I've just been talking about. And to be honest, if you order it and you get all my contact details, just drop me a line and I'll send you one anyway. I think it could be really useful for people.
Yeah, and we can include those in the show notes accompanying this podcast as well for easy access. So,
great.
Simon, really appreciate your time. Thank you for educating our audience on the value of gold and probably why now. Obviously, we were speaking off there, and probably now is a good time to at least educate yourself around precious metals, gold, or even silver. At least educating, and once you get a little bit more confident, maybe then moving into doing something with gold, because as you mentioned, the price is probably going to go forward rather than backwards in the longer term, and it helps maintain wealth. So this is obviously not financial advice, but obviously do your due diligence and research. But really appreciate your time in I suppose making our audience aware of gold and what the value of gold is. So really appreciate your time.
Thank you very much. Really enjoyed it. And I'd urge people just get started. If you don't have any, you might have got shares in a company you're working for or something like that, but I'd seriously get a bit of physical gold and silver. It doesn't have to be much, but just get going on it.
Yeah. Thank you for listening. Hope you enjoyed this episode. Simon's going to be speaking at the Resourcing Tomorrow event, which is at the end of November. So if you are attending or would like to attend, if you look in the show notes, you can get yourself a ticket, and there's also a discount code there as well. And obviously, if you're there, listen to Simon's talk, obviously approach him if you have any questions that you would like to ask in a bit more of a personal one-to-one. I'm sure he'll be able to answer that. So appreciate your continued support. Please share this episode. This episode is not necessarily just for people within our mining sector. It should be accessible to everyone outside of mining as well, because gold is not just for our mining industry. It is help maintaining wealth for people outside of our industry. So please share this episode to anyone that you know, anyone that's investing. Doesn't have to be in mining. They can just be investors, or someone you think could benefit from listening to this episode. Appreciate if you could forward the episode to them so they can have a listen. And if they've got any questions, then obviously they can reach out to Simon or even purchase his book for more information. So really appreciate your continued support. Please share this episode. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.